Hello and welcome to Morning Trade with Moneycontrol. I'm Stacy Pereira and today we're going to be helping you navigate through the trading day with actionable trading strategies, sectoral trends and more importantly answer all the queries during the course of the show. So guys, keep commenting on our live feed and we'll have it addressed by our guest on the show. But before going anywhere, let's understand what we've got from the global handover because there's lots to look forward to. So let's go and see what's making headlines. The US Fed delivers a hawkish pause, holds off raising rates as it looks to measure the impact from the previous 10 straight rate hikes, but projects another 2/4 percentage point hikes before the end of the year. Stocks on Wall Street fall off their highs, but the Nasdaq and S&P 500 recover to close with gains. Asian markets open higher as investors digest that Fed's hawkish pause. The Chinese central bank cuts lending rates to boost a faltering economy recovery, while the Bank of Japan kicks off its two-day policy meeting. The SGX Nifty is indicating a lower start for the Indian markets. And oil prices remain volatile, a drop about a percentage to trade close to $73 per barrel as the Fed's hawkish pause spooks the market. A large build-up in US crude stocks also clouds the outlook on demand. And sources tell your network that Bain Capital is going to offload 0.7% of its total 1.3% holding in Axis Bank through a block deal likely, which could be worth $267 million. And the IMD sounds a red alert as Cyclone Biparjoy makes its way to Saurashtra and Kutch coast. Over 37,000 people have been evacuated from vulnerable areas in Gujarat. Multiple teams of the National Disaster Response Force have been deployed while defense forces are on standby to help the rescue and relief work. So as I mentioned, a lot to look forward to, but the main point definitely being the action taken by the Federal Reserve, where it has gone ahead and kept its key interest rate unchanged last night after having raised it for 10 straight times in order to combat high inflation. But in a surprise move, the Fed has also signaled that it may raise rates twice more this year, beginning as soon as maybe the next month. Remember, July 25th, 26th is when we're expecting the next policy meet, and perhaps that's when they could take that hawkish stance. Now, Fed's move has also left the benchmark rate at about 5.1%, and the commentary is what has really spooked the market, signaling that there is indeed going to be more tightening and it's not the end of that tightening cycle. Now, Wall Street did see that mixed move. We did see the S&P and Nasdaq then recover from those lows, but the Dow Jones did come under pressure, shedding somewhere 230 odd points. And likely that was a weaker handover that we saw. But the Asian markets also trying to push through that. And more importantly, here back home, we're just 132 points away from that all-time high for the Nifty 50. So can we make it through? We're going to be discussing all that and the implications of this Fed move with Peter Mcguire, the CEO of XM Australia. He joins me. Thank you so much. Good morning, Peter, first of all, and thank you for speaking with us here at Moneycontrol. Let's get your views straight out, the outcome from the FOMC on expected lines, but definitely that signal that has come from the commentary saying that we have to, feed in that expected another 2 hikes in this year. So is that what is going to keep everyone on edge now?
Well, good morning, Stacey. Yes, I truly believe it will keep traders on edge. It'll keep a lot of Wall Street having trying to second guess when is that first rate drop going to be, and it could well be, as you mentioned, towards the end of July, and then possibly that September-October period. We've just got to see how inflation is managed over this summer period in the US, and there's no doubt that 5.6% is where they're looking at for 2023. So that's where policymakers have lifted their median rate forecast. And we're just sitting here watching it all and the impact it has to markets.
Right. So let's get a sense of how much this is going to impact markets. You did tell us that, everyone's going to be on this wait and watch mode now to understand when that hike could be. But what is it telling us? We did see a positive number when it comes to inflation at 4%, which was some bit of a relief. So why is the Fed still playing hawkish, or why is this hawkish stance not really changing?
Well, I think, the 4% number, and it certainly was an improvement. There's no doubting that. So we can't argue with success. The other side of it, of course, is if that 2% is where they've got their mindset pretty much on, then, 4% is a big number compared to 2%. So that's why they're looking at, possibly further rate rises over this Northern Hemisphere summer / second and third and fourth quarter. And the impact naturally globally has got to be looked at. We're very thankful at the moment as far as cheaper energy prices. If they were, $20 or $30 dearer, then naturally that would have a great impact to Main Street and the cost of goods and naturally inflation.
Then what is this going to do for yields right now? Because those we saw definitely spiking. It was on expected lines, this outcome, this skip or pause. But is that going to change, and how are we going to see those react?
Well, yeah, naturally keeping a very close eye on yields. And, the other side of it is your 2-year, your 10-year, the cost of borrowing and what impact that has to home debt, retail sales, consumables. All of those data points need to be really examined over the next month or two, and how the consumer is being hit. So everyone says that the US consumer is very resilient. Well, that's going to be really tested this time through. And I think, over the next couple of quarters, we'll really see their resilience, whether they've got an appetite and a continuing spending power, or inflation has eaten away at their wallet and their purse as far as how much they've got left at each month.
Peter, also your views on crude. Now we've seen those really oscillate. There is now fear of the demand outcome, that outlook, as well as China, going back and cutting down its rates, and that being the biggest consumer. So how is that going to react, especially to this decision today?
Well, I think, Stacey, it's currently at, 68.30 for WTI, and you've got $73.10 for Brent. Then it's been very soft. And we understand what the Saudi minister said going back about a week and a half ago, or maybe a fraction longer, before the OPEC meeting, that he didn't want to see shorts being a powerful tool for speculation on trying to drive prices cheaper. So again, Saudis came out with that 1 million barrel cut. If they don't see prices improve from here, I wouldn't be surprised that they look at a further cut sometime in that third quarter.
Right. And Peter, all of this data is what we've got. This whole week has been really data heavy. We are still expecting other central banks like the Bank of Japan as well as ECB to come out with their decision. And all of that is definitely going to have impact on the market. So let me understand from you, what are the other possible headwinds that we're likely to see for Indian markets as well as the others?
Well, naturally, I want to see what the central banks do if there is any movement at all as far as Japan. We're not really tipping any, but certainly 25 basis points for the ECB, and inflation is still quite high there. We've got recessions starting to bite in, or certainly recessionary fears in a number of European countries. And where we're looking at the euro at the moment, it's sitting around that 1.08 number. If they lift rates in Eurozone, I wouldn't be surprised to see that have a little bit of a further lift to the upside. And naturally, where India sits, it's geographically positioned between the two. And the other side, of course, is, you've got a strong domestic market, and they tell me that things are relatively strong as far as economically in India.
Well, that's what we are going to be looking at, how the macro really turns out for the markets as well. But thank you so much, Peter Mcguire. They're the CEO of XM Australia, talking and breaking down what the Fed's decision really will be for the Indian markets as well as the global markets. Thanks so much, Peter. Well, let's move on then and look at what brokerages are talking about, because we just had a report from Citibank on HCL Tech, where they are maintaining a neutral rating with a target of 1,035 per share. Now, HCL has been in the news of late because the company is also looking at the AI side of things. Now, yes, of course, that has become a buzzword, but how are they really going to be incorporating it is going to be important. And what Citi really says is that they see 4 big potential services and opportunities, one in generative AI. The company has also partnered with AI ecosystems and is working on AI solutions with about 150 user cases. So that's going to be interesting of how that pans out and how it is delivered. Now, the company will also infuse and leverage its generative AI in its HCL software businesses. So the businesses that are their clients, that is definitely going to see that AI touch coming in from HCL Tech, and which is why Citi has given it a neutral rating. Now, let me also bring on board our technical analyst, that is Vaishali Parekh from VP Technical, the VP of Technical and Research at Prabhudas Lilladher. Good morning, Vaishali. Let's look at how the markets will really, what the charts are going to be telling us. We are just 132 points away from that all-time high for the Nifty, and the Sensex too has been on that upward trajectory. What are the key levels that one should be watching out for today in trade, and also to understand, where should one look at the next support and resistance levels?
Very good morning to all of you, and thanks for having me on the show. Yes, so, yesterday's outcome was going to be quite an important role for our market today, but it seems to be unaffected. And, for this week, actually, technically speaking, Nifty has met with the technical target of 18,800 levels. Yesterday, we saw a high of 18,769 happening. So we were pretty much close to our target resistance. And as far as Bank Nifty is concerned, nothing really much happening because this sector is in a sluggish move right now. So I would say it is a buy on dip as far as Nifty is concerned, with 18,600 as the near-term support, and we would be gradually looking at 18,900. As far as Bank Nifty is concerned, it is a positive view with 43,800 as the support, to look for a near-term target resistance of 44,400. So that would be my strategy as far as the indices are concerned.
Right. Vaishali, also tell us a little bit of which sectors, now that we have all of this macro data out of the way, at least for now, we definitely have to look forward to whether this Fed's next hike comes in the next meeting itself. But for now, then, do rate sensitives make sense? What are the sectors that one should be playing on right now?
So right now what we've been seeing is, of course, metal has not participated so far, and now it's getting into momentum and it's technically very fairly priced. So in the mid-cap counter, I'm looking at Jindal Stainless, which is outperforming, and we are seeing that comparatively that has given us good returns in the past few days. And likewise, in the front line, JSW Steel is doing very well. So I would look at the whole metal pack, that is Jindal Steel and Power, Hindalco, and JSW Steel, to be bought at every decline, because these are the stocks which are likely to give us a good favorable return from here on.
Vaishali, do stay on with me. Let's take a couple of queries that are coming in from our viewers. There is Satya CK who's asking us your view on Piramal Enterprise. How should one be looking at this stock at this point?
So Piramal actually has given a good momentum, but it needs to now move past 800 levels decisively and sustain above that. So we would be looking for a next target of 850. So on a near-term basis, 780 is the support, and 850 would be the next technical target.
Right, and like you were mentioning, we spoke about the metals back, and yesterday that was among the top sectoral gainer. That a couple of counters there, JSW Steel, Tata Steel. We are getting queries on how should one be viewing Tata Steel. Praveen is asking.
So Tata Steel is getting into a trend, and 105. See, for a positional trade, 105 acts as a very crucial support. And yesterday's candle, it shows that we are ready for a takeoff. And the near-term target resistance comes at around 115 levels. So once we see, if he has bought prior, 115 should be the level to watch for. Once that is taken off successfully and we sustain above that, we would be looking at a target of 120 to 123 levels. So this is how I would play the strategy in Tata Steel.
Right, Vaishali, do stay on with us because there's going to be one stock that will be a buzz in trade. That's Axis Bank, because we are given to understand that private investment firm Bain Capital is likely to offload its stake, which is worth $267 million in Axis Bank, and this can happen via a block deal. In fact, CNBC TV 18 is picking up from sources that this is likely to happen, and the offer price will be in the range of 966 to 977. Right now, yesterday the counter closed there at 977. So within that range, but if it is lower, then it will perhaps be at a discount of somewhere around 1.4% or so as against the current market price. Now, Bain Capital is one of the minority shareholders of the private lender and has a total stake of about 1.3%. And remember, the bank had registered a net loss in Q4 of 5,728 crores. Now, this was largely due to that buying cost of Citibank India's consumer business, which they did buy during that quarter. But if we are going to see this block deal, then Bain Capital is the one looking to offload its stake in Axis Bank. Let me bring Vaishali once more to get her take. She did give her take on banking stocks, but Axis Bank has been on the radar. In fact, a lot of comments that are asking us about SBI, Axis Bank. How should one be viewing banking stocks at this point?
So I would go stock specific, but Axis Bank, technical target comes at around 1,000 levels, and we are in that range. So for a continuation for this uptrend, in spite of all the news that we are getting, 950 is the crucial support level. If 950 levels break, then I would change my view and maybe the stock can get into a corrective move. So as long as 950 levels are held on, I think continue holding this stock for a target of 1,000.
Right. Let's also look at a couple of other stocks that will be a buzz. One of those will be the Central Depository Services, or CDSL. Now, the BSE, or Bombay Stock Exchange, has sold about 47.44 lakh equity shares, or somewhere close to 4.5% stake in CDSL. Is this going to have some kind of implications? Let's ask Vaishali, how is one supposed to be looking at this? Because obviously BSE held about 20% stake and now it's looking to offload that. So how should one be really viewing this?
So I would say if yesterday's low, that is 985, if that breaks, then I would see that there would be further profit booking coming in. And otherwise, for now, the way we are looking at it, if it is factored in, then I think right now it is at a very crucial support level. And once, if the selling is just done with and the stock is held on to this level, I would say that we would see a bounce coming to around 1100 levels. So it would be a wait and watch. If yesterday's low 985 breaks, then I think one should exit the stock for now.
Right, so exit CDSL because of all of this movement that we are seeing. Another query that is coming in from Krish, he wants your views on IGL and whether it is a good time to be looking at that stock at this point.
Yes, so IGL, we have been seeing that after a good consolidation. Yesterday, we saw some volume pickup, and again, the trend overall is pretty much strong. So I would say yes, worth buying this stock at this level because the risk is very low. 460 should be the stop loss. And I think for a near-term trading strategy, look for a target of 485.
Right. So that's the view on IGL for Krish, who was asking us what they could expect from there. Let's look at a couple of other stocks also. HCL Tech, we did speak about the technology sector and whether this would be a good time. And we are given to understand that HCL Tech has in fact expanded its strategic partnership with Google Cloud. And this will help the enterprise leverage its generative artificial intelligence. Now, we are hearing a lot of artificial intelligence being a focus area for these tech companies going ahead, and they are going to develop a joint solution powered by Google Cloud's generative AI technologies. Now, HCL Tech's own AI platforms and solutions will utilize Google's cloud full suite of enterprises generative AI products as well as services. So that is going to be an interesting counter to see how these IT companies really integrate AI now and make that one of their biggest selling products. So that's going to be interesting to watch. Well, let me thank Vaishali for all the queries that she has taken through. But before I let her go, let me also get her stock picks and recommendations that she would like to give for our viewers. Vaishali.
So currently, I like JSW Steel, as we spoke about the metal counter. JSW Steel, I would say buy at every decline with 745 as the support level and look for a target of 820, 850. That would be a positional trade. And well, yesterday I saw some of the fertilizer stocks and chemical stocks are doing very well. So Deepak Nitrite is one of the stocks that I would like as a tech trading strategy. That would be my the stop loss would be at around 2030 levels, and the target that I'm looking for is 2200. So Deepak Nitrite is another stock which comes to my mind. And in the mid cap counter, which is just showing signs of some revival and very favorably placed, is Clean Science. Have a look at that stock because I really like it, technically very well placed. It's in the process of making a higher bottom. And if the trade goes in our favor, I think 1320 should be the stop loss. And once we see the momentum setting in, I would look at a target of 1600 levels. So this is one stock which I think is nice in a market scenario like this.
Right, so two calls coming in there from Vaishali, Deepak Nitrate and Clean Science if you want to be looking at. Well, but seems like that's all the time we have on this edition of A Morning Trade. Stay tuned. Up next is Opening Bell.